Hello and thank you for joining us for today's MacDesk Floor Report. I'm Rebecca Darst from the Market Access Center, your eyes and ears on the floor of the New York Stock Exchange. We are up 11 points in the Dow, that's up 4 S&P points, on a mixed docket of U.S. data points today. We came to the floor this morning with futures indicated decisively higher, thanks in large part to gains out of Japan. The Nikkei average posted its best close in a month on speculation that the Bank of Japan is set to announce more stimulus in the coming days. This sent the yen lower, particularly against the dollar, after gains of a couple of dollars in the cross over the past 2 weeks. Moving on to Europe, we had a surprisingly bullish read on economic growth out of the UK, which was first out of the gate among G7 nations reporting GDP this morning. A 1% sequential increase for Britain's GDP in the third quarter was the swiftest such rise in 5 years, the number far outstripping even the rosiest street estimates. The gain was due in no small part to growth on the order of 1.3% for the services sector, which is a huge chunk of the British economy, as well as bumper Olympic ticket sales. Here in the U.S., the data picture has been much less resilient, although we were due for some relief after several days of earnings-driven declines this week. As we mentioned, futures did point higher after weekly initial jobless claims came in at 369,000. That was a little lower than the market was expecting, with the read on September durable goods data also coming in a little better than expected at plus 9.9% against market consensus, which was in the range of 7.5% to 8%. Analysts, however, have noted that excluding transportation, the gain was just about 2%, and the prior read was revised even lower, with new orders in non-defense capital goods actually coming in flat. All of these pointing to a continued sluggish environment for capital expenditures, especially heading into tomorrow's Q3 GDP number. We also had a rather unencouraging mid-morning read on September pending home sales. After a big decline in August, analysts were looking for a rebound of a couple of percentage points. Instead, we barely came in above the flat line. This number conflicted markedly with yesterday's better than expected new home sales number. Again, giving you the setup as we close out the week, we've got the initial read on Q3 GDP due out tomorrow morning. So we'll be looking for potentially volatile action in the SPY weekly options. The largest open interest gain we've seen in that contract this week showed up on Monday morning at the $142 put strike. This followed a large opening buy trade last Friday. Although the activity has been a bit less directionally committal today, with comparable activity showing up in both 140 strike puts and 142 strike calls. XLF November call buyers have been active today as well, as we mentioned in the midday. So we'll be following the action closely as it unfolds throughout the trading day tomorrow. Be sure to check your inbox for the midday and give us a call if we can track down the action in your stock. For now, that's it for me, Rebecca Darst, for the New York Stock Exchange and the MacDesk Floor Report.